Before we start our today's lecture, check out our 7-Figure Traders program, a program dedicated for you to become a high-performance trader, only going for $115 per month with trading signals included. Find the link in the description box below and join the winners. Welcome back to Bunnex Investment Group. In this video, I'm going to be for those who are actually paralyzed in terms of analysis, what we call analysis paralysis, whereby you cannot know what to look for within the market. This video is solely for you, or you have made a lot of losses and you do not know, you're actually hopping from strategy to strategy. This video is for you as well. But before we do so, please check out our free Telegram channel. I'll leave the link in the description box below and be part of our community. Without further ado, let's jump into the content. The first thing that you are going to need are only two things: price chart and the Traders Dynamic Index, which I can as well provide you in the free Telegram channel that I've just talked about. You can just give me a text and I'll provide you for MT4, MT5 as well as mobile. So how do we use these two? We are just going to be looking for what we call a day of consolidation. Definition of a day of consolidation is a day whereby the opening price and the closing price are almost at equal level. That's the definition that is going to govern you. So the first thing that you need to do is to see a day of consolidation. But this should be in line with the market structure. Are we in an uptrend? Are we in a downtrend? If we are in the uptrend, we'll be looking for buys. If we are in the downtrend, we'll be looking for sales. So basically, in this particular day, we can see that the opening price and the closing price were almost at equal levels. If I ask you, was this day a day of rise or a day of drop, you'd say it was a day of consolidation, clearly. So after seeing a day of consolidation, you need to mark its low. This was its low. And then on the following day, that is where you make an entry. You must know your candlestick reversal patterns very well so that you'll be able to actually confirm your entries at yesterday's low. However, we've said we need a Traders Dynamic Index. In this particular Traders Dynamic Index, there is an RSI line that pierced outside the bands and went inside the bands like that. This effect is called a shark fin. Therefore, a shark fin at yesterday's low after a day of consolidation is a powerful point of market entry. This was a day of consolidation. This was actually a day after that day of consolidation. A retest of yesterday's low, a shark fin, a candlestick reversal pattern. You enter without fear. Make sure you target 2 to 1. In this particular case, we can see the market actually went in our direction, satisfying a 2 to 1 reward to risk ratio. We move forward looking for a day of consolidation. Your job will be to look for a day of consolidation only. And after looking for a day of consolidation, you need to check whether it retests the low, the following day retest the low or the high of the previous day of consolidation. In this case, you can see the opening and the closing were not in line. This was actually a day of rise because price ended at an upper price than it actually opened at. Then this day was actually a day whereby we had opening and closing almost at the same price point. This means this was actually a day of consolidation. What did we say? We said you mark the low of that particular day of consolidation and then expect to see price come back to that low and then make your entry. We can see the market actually gave us these candlestick reversal patterns, and there was a shark fin on the Traders Dynamic Index. This was actually a good point of market entry where we could also satisfy a 2 to 1 reward risk ratio. We can see the market actually went around, let's check the number of pips. It was around 65 pips from these candlestick reversal patterns. And then after that trade, we can see, or we discovered that the day ended as a day of consolidation. Why? Because after it went to the upside, it went to the price point where it opened from. So this was a day of consolidation, meaning that it was valid for us to mark its low and anticipate a retest of its low on the next day. On the next day, what happened? We had interaction of yesterday's low, a shark fin on the traders dynamic index, but then the market later gave us this spike. This could have taken your stop loss, and we say when you are taken out, you do not go for vacation, but you actually reassess to see what happened and where can you make an entry. This was now a W at yesterday's low level, meaning that it was now a more concrete point of market entry, much more confluence, where we have a W at yesterday's low, a W confirmed by the traders dynamic index, a bullish engulfing pattern that has been issued, meaning this was actually a very good trade. We can see the market actually went our way, satisfying a positive risk to reward ratio of 2:1. So basically that is what you'll be looking for. Stop crying on your losses and look up to the future to see what you can actually achieve. On that note, we've come to the end of this video. Thank you for watching. Like and subscribe, and I'll see you in the next one.